Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. Today we're going to get right into a day trading strategy and what I believe is one of the best day trading strategies, especially for beginners. And I'm going to tell you why. Very often, especially in a market right now where it's going up, it's going down, it's not just a clear uptrend where you're just getting in there and buying every dip. You really need to have structure. You need to be able to say, if this happens, I know exactly what I'm going to do. And that's where newer day traders especially get into trouble, because you tend to chase price. You tend to be buying at the wrong time. And yesterday's price action, and it won't matter when you watch this video, it could be a year from now, it's a good lesson. Yesterday's price action was incredible to teach this, because we had this really big gap down in strong stocks. And then it was a question of when was the right time to start buying. And if that's anything you can write down, definitely write that down now. When is the right time to start buying? It's very easy to look at a chart and say, okay, that stock's going up, I want to be buying that stock. But what to look for and when to buy it is not the same thing. So we're going to use a very simple moving average system right now that filters it down so you know exactly what you're looking for, and which is kind of exciting, actually gives you what we might call a conviction level. Now, that doesn't mean it's definitely going to make money, but what it does mean is that the odds are on your side. And again, I can't stress this enough. Having structure to what you're looking at is very important, because here's the part that nobody talks about. Sometimes you need to be able to look at the market and say, I don't see anything that's going on. I don't see a trade. And I know that's not talked about a lot, but let me explain why that's so important. If you think that there's always something to do, that means that you're not looking for something specific. That means that you literally don't have an edge. Now, remember, trading is about an edge. It's about, if we put on a trade, we're accepting risk because we think something's going to happen most of the time. But only do we look for trades when that happens. So if you can't every once in a while say, well, I don't see a good idea right now, that just means that you need to dial your edge in a little bit more to the point where you know, okay, there it is. I'm going to do something. I have no idea why I keep using my hands. Or if it's not there, you step back and do nothing. It's such a critical part of trading, but it's a small thing that nobody talks about, which is how to avoid bad ideas. And yesterday's market was a really good one, because we're going to use the SPY ETF and one other stock to illustrate what we're going to teach right now. So let's get right into it. Oh, by the way, obviously, thank you so much for being here with me today. If you can give me a thumbs up if you find this video helpful, that would really mean a lot to me. And don't forget to click down and subscribe. You'll get more education like this, as well as my my daily stock picks, my best stock pick videos. So if you could just give me a thumbs up, that would really be awesome. So we're going to head on over to the charts, and we're going to start out with the SPY. So you can see on a bigger picture, the SPY has been near all-time highs, pulling back right now. But we're going to focus on this price action from yesterday, which is where we had this big gap down. Now, if you look here in the SPY, 385 down to 380, so roughly a $5 move from the gap down and a move down. Now, everybody was chomping at the bit. You couldn't wait to get in. You wanted to be a buyer, and it was a question of when. So we're going to start to filter in, and I want you to write these down. There's the 10-period simple moving average, the 20-period simple moving average, and the 35. So we're going to be very clear on what we're looking for here. So what we're looking for first, and you know what? I'm actually going to reverse order here. The very first thing we want to know, using the 35-period moving average, simple moving average, is we're going to use that as our long-term identifier. We're going to use that as the price action that tells us, okay, over time, buyers have pushed it to a certain point, and now it's time for at least for me to start looking at it. So we're not even going to look at it, whatever stock we're looking at, unless price is above the 35-period moving average. But we're going to actually drill down a little further. So here's the first piece. Don't even look at it unless price is above, because that's the little bit longer term order flow, longer term where buyers are pushing a stock. So remember, simple and easy is not the same thing. It's simple to look at, but knowing and doing is not the same thing. A lot of people have this information, but don't use it. That's what we're mostly concerned with, actually using it. So let's just look at the SPY now before we put anything else on the chart. You can see all day up until this point, right? Maybe for 5 minutes here, but for the most part, right over here, that was the first time where it was kind of okay to start looking. So think about what I just said. All the way up until 1:30 in the afternoon, you weren't looking to trade the SPY ETF if you were a day trader. Think about that. We just filtered this out. It didn't even meet our criteria until 1:30 in the afternoon. That's hard for a lot of traders, but that's good trading. Next, we're going to put in there what is the immediate trend, which is the trend that you're trading right now. So in other words, is this immediate trend above our longer term trend? And that's where we're going to put in the 20 period simple moving average. Okay, now there's two things here. The longer term trend, the 35, should be rising. Your intermediate trend, which is the 20 period moving average, should be above it and rising as well. Last, now we're going to put what is called the momentum moving average. And this is the filter that tells you, okay, now start looking for opportunities. So in this instance over here, right here, it's rising. The 20 is rising. The 35 is rising. Now we're going to add the 10. The 10 is our filter that tells us, okay, now start looking for entries. This is different. As long as the 10 is above the 20 and the 20 is above a rising 35, only then do you start to look for entries. So here's what's super interesting about this. The biggest problem by a mile, and I'm going to come back on the screen here just for a second. The biggest problem by a mile for most traders is being patient. By a mile. We're only looking to allocate money, take risk, put a trade on, because there's a high likelihood of it moving in our favor. And especially as day traders, there's so many opportunities. Something just moved up. Oh, let me get it. I got to get involved. But what if the edge is not there? What if there's not a likelihood of it continuing to go? What if you can't look at that chart and say, wow, it's really obvious that the smart money, the deep pockets have been buying that stock for 2 hours, and only then should you be looking to find an entry. That's the difference between somebody who takes money out of the market every single month. I didn't say every single day, every single month, and somebody who knows everything about chart reading but can't make a dime. They don't have structure that says, only when this happens will I get involved. Now, here's a bigger part of the equation. So we just talked about a really clean, easy, where the 10 is above the 20. So the momentum is above our most current trend. The 20 is also above the 35, which is the longer term, what we call order flow. As long as the 10's above and the 20's above, then you start looking for entries. Now, the next part is a little bit, I'm not going to say tricky, but it's a part of the equation. If the 10 goes below the 20, and I'll show you an example in a second, and the 20's above the 35, so you still have the conditions to look for a buy, but the momentum turned down, you don't look for a buy. So do you see, this is where the consistency in trading comes from? You need to say, if this happens, then I'm doing this. If this happens, then I'm doing this. This is the difference between anticipating and knowing exactly what you're going to do versus reacting and feeling like, what's going on? And that's what most traders do. Most traders don't have, if this happens, then I'm doing this. If this happens, then I'm doing this. Most traders simply react to price. The way that we do it, the way I do it in the boot camp, and if you want to learn about that, click down into the description. It's very laid back. We know exactly what we're looking for. If we see it, we look for entries. If we don't, we talk about sports because that's real trading. Real trading is you don't force it if it's not there. So we're going to go back to the charts. I'm going to show you exactly what that means again and the significance of what I just said. So out of everything that happened during the day, this pocket of opportunity right here from 2:30 to 3:30, that 1 hour was the only perfect hour there where we had an entry. Now you could make a case that over here, and this is a really good point that a trader would bring up. You could say, well, over here, everything was in the right order, right? That's where you'd be buying. No, and I'm going to tell you why. This is the deeper levels of thinking, right? You don't buy in front of the last place sellers came in and did something significant, which is why that hour was the first time everything lit up. You clear that level, and then you have a trade that just floats off your fingertips because you were patient. So we're going to take a look one more. We're going to take a look at the last 2 days of Disney. And here is a big thing that I want to get across. And this is probably one of the most important things here. We all have trading losses, right? We put on trades. Some of them make money, some of them don't. Losses are a part of what we do, right? Here's the challenge. If you're struggling and you say, you know what, Pete, I got great discipline. I'm out on every single trade, but you can't get paid. That means that you need discipline for the winners. You need to make more on the good ideas instead of just taking a little profit, What we're looking at right now is a filter to help you hold those winning trades longer. If you're not making enough on your winners, we call that small profit syndrome. If you have small profit syndrome, you definitely need to watch this video and take notes again. So we're going to head on over to Disney. We're going to look at the last 2 days because it gives some really good opportunities. So you can see right out of the gate here for the period of right up until 1:30 in the afternoon where it flattened out, you could have stayed in the position the entire day. The 10-period moving average was above the 20. The 20 was above the 35, and they were all rising. Now, is it that simple? Yes, it honestly is, but you need the structure. However, is it easy? Well, easy means that you've got your emotions under control. That's the tough part of trading. Now, we scoot over to yesterday where it becomes really easy. So now interesting, not easy. We come into the day saying Disney was a rock yesterday. I can't wait to trade this stock. I want to be day trading this thing again. At what point is it okay to start trading Disney again? That's where you go to your filters. So now the filters here in this situation, right here, is where the 20 finally crosses above the 35. See, the 10 went early. The 35 is already moving up. Right here is where the 20 crosses and starts to rally. So this rally here is the one situation where you're looking to buy a buyer again. Now, you can make the case again that you didn't want to buy into resistance, but the whole market was flying at that time, so it was okay to take this trade to the upside. Didn't follow through. The whole market turned down, but it was the best idea on the table at that moment. That's the big thing. This right here, this moment, I'm going to zoom this out a little bit. This moment right here is what's critical. This moment is where, remember we said the momentum moving average that tells us only when this is above do you start looking for buying opportunities? It traded below here. So in this, let's see, what time is this? This is 12:30 to 12:55. So let's just say 12:30 to 1 o'clock. Despite everything pointing higher that moment, the momentum moving average crossed down. So you're not doing it. You're not even looking for an entry. When it trades back above, the 10 is now above the 20 and above the 35, and they're all rising. So from this moment to this moment, that's an easier, clear move, right? But here's what's kind of cool. And this is what we just said that's very important. The 10-period moving average remains above all of the moving averages for that entire time. That's where you squeeze more winners. That's where you already have a good trade and you're watching it move in your favor, and you don't say, oh my gosh, that one 5-minute candle just spooked me out of it and then it moved $3 in my favor. It's those little moments of decision because you have structure. And again, we labeled it the trading boot camp for a reason. It's a boot camp of let's learn what you should do all the time, and then let's practice doing it. That's why it's a boot camp. Scroll down, learn about it. But the key here is this. If you're struggling to get paid, but you know everything about chart reading, it just simply means that you need a little bit more structure. So I strongly recommend that you watch this one or two more times. We're talking about the 10, the 20, and the 35-period moving average, and then use them. Don't just know them, use them in the order that we talked about. And I think the most significant thing about this video is that moment in the SPY ETF where I showed you all day, nothing was lined up until later in the afternoon. That's the focus. That's the professional mindset that you need to say, until I see that, I'm okay with being in cash because that's where the money's hiding. So if you have any questions about this, definitely leave a comment below in the video. I'd love to hear from you. And honestly, if you could please do me a favor, if you like the video, give us a thumbs up because I want to know what kind of more content I should produce for you. It's really about you. I want to know what you like and what we can do more of. And please subscribe. That would be awesome. So have a great day, everybody. Take care now.